Hey guys, I got 3 strategies if you've got some land or a property and you want to do a vacation rental. These are not typical your typical 3 strategies, so I want you to listen to the end because the third strategy is my favorite. All right, the first strategy, and before we get started, sorry about the background. Inside, it is literally 100 degrees outside. I tried to do this outside and I was soaking wet and it was miserable. So you're in the car so I can have some air conditioning. All right. First strategy is just to sell it. Now, this isn't, you could obviously just buy some land and resell it, but and you can probably make a little bit of money. However, for this piece of land that I have, what we've done a lot of value add strategies already. It's still, we haven't done anything to the property. However, we've done some civil engineering to get it replatted. We have done some design work around that. We've had it tested. It's not on sewer, so we've done the perk test. We've paid for that, and we've got approvals from the city and the county to build this property out. So you can package all this up, the blueprints for the houses or whatever you're going to build there, the civil engineering, the environmental. You can package all that up for an investor. You do a pro forma and like, here it is, here's the package, it's turnkey, here you go. I know several people, and this is all they do, and they make a very healthy living doing this, and it's doing everything from the comfort of an office. But you're doing a lot of value add strategy of going through all this paperwork. It's taken a lot of time with surveyors, county officials, city officials, environmental engineers, civil engineers. A good experienced real estate investor will value that and will pay handsomely because you've done all the the headache and the paperwork. So that's a good strategy. You can make a very healthy living just doing that, buying raw land, getting a good discount, and doing all those value add strategies of getting it designed, the civil engineering done, the perk test, and the blueprints of a good profitable product right there in the market that you're doing this in. Okay, that's the first strategy. The second one is to partner. So a lot of maybe vacation rental owners or investors, they might want you to partners, and that could be, I could talk for hours on that. Don't worry, I'm not. But this investor I was talking to today, they wanted to, they will still buy the land, they will pay for all this. However, they want to discount some of my fees and for that discount, me discounting some of those fees, they will give me a sliver of equity in their deal. Obviously, they've got investors, so they will get a good return, and I will get, not only I will offload this property, so I'll get my cash back, but I'll also retain a sliver of equity of the upside of the monthly cash flow, and if they sell it. Okay. Again, we could talk for an hour. Maybe I will go over a lot of different partnership structures, but that's the one that they proposed. It's a pretty simple model, and it works for both parties. Obviously, a lot of risk in that if you have a partner that's going to do something shady accounting wise or something for your sliver of equity. So definitely talk to an attorney and your accountant about whatever kind of partnership structure that somebody proposes to you. All right. The third strategy, which is actually my favorite, is if you do a master lease. So what this is you go ahead and, I've already got the land, I've already invested all this in the design, the engineering, all that. Well, then go get a construction loan, go do it, go build it. But before I even do that, I have a commitment from them, a lease. It's already pre-leased, the whole thing, this whole little development, and they've committed to a lease. Now, this isn't your standard lease that you would want. You would want a very long-term, more of a commercial type lease with like a 5-year lease, having commercial escalators in there, or inflation escalators. You can even throw a performance bonus in there. I don't know. It's more of a commercial type lease, not just like you wouldn't invest all this just for like a 1-year lease. You would want to master, a 5 or 10-year lease. And what that provides them is, they can model that out in their spreadsheet for their investors that, hey, we're going to pay X. So let's just say it's $10,000 a month. And this group of investors thinks that they can do $10,000 a month, let's say, in per property. This particular property can have 10 units, so that's $100,000 a month. So for them, it's like, man, even though we're only paying $10,000 a month, is a lot of money, but we're going to gross $100,000 a month. Obviously, they're going to have a lot of expenses with just operating the property. My numbers still work for that scenario. And I get a great long-term lease, and their numbers still work because, just keep math simple, a 30% expense ratio. So they've still got $70,000 to play with there, and minus my $10,000. So that's $60,000 in profit a month they're still making. So that works for them as well. Why I prefer that is because I want to own the assets. I want to have a long-term approach to real estate here in America, especially at this particular property. And I get the tax benefits with that as well. So I highly encourage you to kind of approach this development kind of structure. So if you have raw land, kind of evaluate those 3 options. So again, you can just sell it. Okay, you can do some kind of creative partnership, or you can take on more of the financial risk up front, but knowing you've got it leased long term after you do that. So anyway, hope this helps. Like and subscribe, and tell me if this was valuable or not in the comments. And if you have any questions, leave them in the comments. Thanks so much, guys.